Okay, folks, we are looking at the dollar index as a daily chart, and we've had that run down into our mean threshold of the bearish closed candle here, which is a bullish order block. I mentioned that would be our next draw on liquidity. We opened this week below that and then traded up and closed in what would be the gap and traded right up into the butt end of this down closed candle. And then we opened on this candle, traded down, and then today we opened and traded right back up in here. So far, we're finding the ability to keep price below this candle's close, which in my opinion is good. I want to see that very characteristic. I do believe the next draw on liquidity is sell side liquidity here and below here, and the volume imbalance that's nobody in the candles here. That's what we're looking for. So that's the three targets: below this low, below these relative equal lows, which is also the volume imbalance, and trading into this order block. It's the larger movement here that it's going to want to seek liquidity into, with rest right below this low here. Near term liquidity is here. Now what changes it? What removes the bearishness on the dollar index? We trade through the mean threshold on a closing basis on a daily on this candle here. Okay, so this candle on 9/11, September 11th, 2019, if we trade above the midpoint of that, and we'll just do this, I'll use this line here, and that will be our marker going forward. So if it trades above this line here and closes, then we're going to make a run most likely above the equal highs. Otherwise, I'm thinking we're going to go lower. Now tomorrow, as a reminder, I don't want to get too far in this video and not bring this up. 7 a.m. New York time, we have the British pound rate announcement. So that currency is going to have its own version of what we saw today in the dollar index, which kind of was, mooted because they just left the rates unchanged. So it's not bullish, it's not bearish, it's just whatever. And we're still inside this large range. I like the fact that we went below these lows here that trendline traders would have trusted that as support. We broke it, came back up, and is that classic return back to what would be a broken trend line? I don't know. It might be, and it might not be. What I'm waiting to see is tonight in London how we set up that 7 a.m. New York Open GBP USD setup, because I want to know where the liquidity pools are resting, and we'll probably have a little bit of an earlier start than normal when I'm chit-chatting in New York. It's usually around the 7 o'clock time. It'll probably be more around the 7 o'clock in the morning. The 6 o'clock morning time when you start seeing me active on Twitter. All right, so that's the business for dollar. We're waiting to see what's going on. I just told you the parameters of what should take place and what I'm expecting, and obviously everything that would occur in those scenarios would be a reverse of what we would expect to see in euro dollar and cable. Taking us up into euro dollar now. Euro is actually very sloppy in here. I really wished it would have done a little bit more than it has. We do have a little bit of an exposed area here, and this candle's low at 111.40 still remains the next upside draw. If we pop through that, relative equal highs here, because there's really no imbalance up here. We came back into the fair value gap there, so I don't think it's necessary. So if they run above this high here, it's going to be a run here, and then we have these equal highs, which we've talked about previous recordings. I don't like this here because we didn't come down on this candle and make a lower low. We have equal lows. So does that mean we see a drop in euro dollar and a rally on cable, which would cause the euro pound to drop further? It could happen. I'd still think that our focus should be on GBP, but on this particular currency, I don't like what we have here. I don't like this structure. I don't like how it's staying in this range. It's really, really, is low probability as you can get So you really want to just be careful trading euro dollar. If you're going to be touching it at all, just do it with no leverage whatsoever in a demo. I mean that because I know some of you people in here want to trade with live funds when you're not ready. If you're doing anything with euro, make sure it's demo. No real money, no leverage, because I just don't like where we're at. If we would have traded lower on this candle here, if this candle made a lower low than what we have here, 109.26, versus the low here at 109.25, we were unable to go lower on this candle, which would have been better. Much in the same way, if you look at the British pound, see how we went lower relative to that low and this lower low? That's nice. We want to see that. Then once we have this swing high broken here, it's a little bit more easier to trust it and then start looking for buy-side liquidity pools and premium arrays to reach for. We don't have that in euro dollar. It's just equal lows. And I'm not saying or suggesting that it's going to come all the way down and take them. It can, but I don't think that's the likely scenario. I think that it's just going to go below this swing low here. And how far into this wick does it go? Could be the rejection block, but that's not a high probability scenario for me. I wouldn't want to trade that. It's not a real clear, okay, it's reaching for X and it should not go to Y, that type of scenario. Here, this is the only real interesting factor I have from a premium array. In other words, an upside target. This remains as we indicated in the last video. So if we get there, and if I was able to take a long one, I would take 80% of the trade off there and just be content with that. In other words, that would be it for me. And then I would wait to see if we have something else that would indicate here. But as I indicated relative to cable and the price action in euro is not the currency I want to be in. And because we have an injection of volatility tomorrow at 7 a.m. New York time, it's going to provide a lot of movement, or potential movement, let's say it that way. And cable tends to move really well. And if it has news behind it, it's going to do probably a lot more than I would expect it to do. So just be real careful. Try not to spend too much time focusing on euro dollar. Keep your focus on cable. Now, we have a buy-side liquidity pool here. We have the remaining SIBI, sell-side imbalance, buy-side inefficiency, that would rebalance up to the low of 26.31. We're just going to call it 26.30 to be fair. And then if we trade above this candle's high, we have the small little imbalance here, and then the bearish order block that's right here at this low. So 26.64.5, so we'll call it 26.65, reaching up for liquidity. So that'd be an upside draw. The thing that I'm concerned about is if we have the rate announcement tomorrow at 7 a.m. for GBP and we come down, we could wick below, trade into the order block here, close the inefficiency on this one single candle. This is a BISI, fair value gap. Even though yesterday we attempted to do that very thing, come down, test an old high, but it gave us a fair value gap long entry, and we had a real nice reaction there. We're inside yesterday's range, so this is an inside day. So this candle here, its high is lower than the previous candle, and its low is higher than the previous candle, as you see here. Okay, so the high and the low is inside of the range of the previous day's high and low. This is very indicative of a large range day. That means tomorrow, whether it goes higher or lower, it's going to be a big candle, most likely. If it doesn't form tomorrow, it will absolutely form on Friday. That's usually the general rules. So what I would like to see happen is it not to come back down here, because it's already, in my opinion, done its work going into the fair value gap and showed a willingness to want to rally. We made a higher high, and now we have an inside day ahead of the rate announcement. That's classic order flow. That's normal. That's a normal thing. That's why I'm telling you to focus on GBP and not spend so much time worrying about euro dollar. Now, a large range day could see this thing shoot up into this very target here, or roll over into it on Friday. But I feel confident in my expectations tomorrow. Now, that could change. When I see London tonight, it may do something entirely different, and it may change the current market structure. But right now, I feel comfortable when I lay my head down and get up around midnight tonight, that it will probably be what I'm hoping to see. And then I'll do what I can in London if I can. But I'm really trying to get a gauge on what they're going to be reaching for that rate announcement at 7 o'clock in the morning, tomorrow morning. And if we go through this, as I mentioned, we already said in previous recordings, we have relative equal highs in here. And then some of these fair value gaps would be targets. Now, I'm not saying that's going to be there tomorrow or Friday or even this week at all. That would be a long-term upside draw. But this week, I think that we could very easily, if the rate announcement puts the right type of injection of volatility behind it, we could easily see that get hit today, and tomorrow and into Friday. Okay, so we're expecting a very large range day. All right, so I'm going to go into a smaller time frame. I gave you some things on Twitter today, and I wanted you to study it, and I kind of want to go over that now, and then after this we'll go into a couple examples of what I traded today. Not all of them, obviously, but I did a couple mirror trades on what I was doing in that account, the one I'm running up on Twitter. And once I hit 1.5 million with that, I'm going to stop. Just want to hit that and be done with it. But let's see here, zoom in a little bit. All right, so if you look at the tweet I gave you this morning in London, I said I was interested in 24.40. Okay, so 24.40. I'm just going to put a horizontal line on. Okay. Now, what specifically is so important or interesting around that level? Okay, well, first of all, forget all of this happened. So your chart would look like basically that. Okay, so all of this price action is being supported by this one single candle. It rebalances at this candle's high. Okay, 124.43 and 7 pipettes. In normal ICT fashion, we would have a line laying right on top of that high and extending it out, expecting that BISI, which is a buy side imbalance, sell side inefficiency. All that means is it went up too fast and too far, and it's going to want to come back down and offer price going lower, where it's only offered on the upside quickly. To be an efficient market model, the market will come back down and rebalance to this price point or very close to it. The market does in fact do that. I sold short in here, added to a position, and then I was looking for 43 as a cover. To get 43, I have to trade to 40, right? Well, it went down in my feed to a low of 38.6, which is not bad. Real close to what we were looking for. Now, I'm going to go into this little area here and flesh out the reasons why this is an important level. So a lot of you new members are going to get something that is very, very cool. All right, so what I'm looking at here is the wick. Okay, I'm going to zoom in. Get in here a little bit tighter. And actually, I want to do a different color because that's kind of hard for me to see. It's probably very difficult for you to see as well. That shade is enough because I want you to see the candles, not so much the big shaded area. So the candle's high, or the wick, to the close of that candle. Then we open here and we trade up. Now what has essentially happened in here is that we had a balanced price range. That means we traded up to this candle's high and then we closed down. So price went up and then down, and then it went up again and left that candle's high. So this whole area that's shaded in, the price range between the candle's open and the candle's high. Let me see if I can pop it up here. There you go. The candles close, rather. The candles close at 24.38 and 8 pipettes to the high at 24.43 and 7 pipettes. That is a balanced price range after this candle opens up and trades up and through it, through this candle's high here. So what that means is the market has efficiently delivered price between those two specific price levels. So if we're looking for real support and resistance, this is what it looks like. This candle's close, 24.38 and 8 pipettes. Look at the low here, 24.38 and 6 pipettes. It only went 2 pipettes below this particular candle's close. You see that? That is precision. This is a balanced price range. Now, this same concept is the basis of what a fair value gap filling in is, a liquidity void being filled back in, a price vacuum being filled back in, an order block being traded back down to. That same premise of rebalancing is occurring here on other fractals. But this is a particular element or signature that I like to look for. Now, the wonderful thing is you guys watched me do this, and the whole public did too. I mentioned it in advance, telling you that this is the level I like. And it ended up being the low of the day. We have that low in London, and it ran up to a high of 25 and 11 pipettes. I'm sorry, 25, 11, and 6 pipettes rather. Clearing the rejection block, which is this candle's close. Okay. Overall, I like the market structure that we have here. I think that it still promotes the idea of another leg higher, but we do have relative equal lows here that if they get tagged, we have a fair value gap over here with a bullish order block. How do I know which order block to trade, Michael? It's the order block that has a fair value gap accompanying it. Okay, you're gonna hear me say that a lot because you're in mentorship. Now you've been given that answer multiple times. Please don't ask me in emails because I've given it several locations. So if we trade lower, okay, or if we trade lower first, going into the rate announcement tomorrow, I'm going to be focusing on this fair value gap here in this bullish order block to provide a run on trailed stops, because anyone that went long here and had this retracement and they weathered that today, their stop has now been jammed up right below these equal lows. So what we're looking for in London tonight is if there's a Judas swing that drops initially lower, we're watching these equal lows, this fair value gap to fill in that would rebalance to this high here is 24.24, and this candle's high is 24.25. Easy round, well, not round, but 5 level. We're just going to focus at 24.25. So 24.25, if it trades down to that level here, that would be a scenario for me to look for a potential buy going into the rate announcement at 7 a.m. So I'm not suggesting you do this tomorrow because it's a rate announcement, but I'm just giving you what's in my head. And if I get the scenarios, I'm going to execute on those things if I get supported evidence with the dollar index and other factors I look for in intraday, which you learn about in the day trading and scalping models. So if we don't come below here and we just start ripping into this higher in London, I don't want to see it just barely poke its head above this high here. I would rather see it just ram right through it and then have a retracement back into this wick at New York. And that would be an area where I would expect to see a new leg move higher. Those are the only two scenarios that I like. If either one of them do not form, or I don't think that they are forming, I'm not doing anything until around 8:30 tomorrow. That means the normal routine of New York Open will be established. It'll be post UK rate announcement, and then we can just deal with the price action after all of that. I like to see, again, a lot of momentum, a lot of velocity come into the marketplace. And usually when we have GBP news, it tends to overreact, which is why I like that pair the most. It has the right amount of volatility for me, and when it wants to be noisy, it can be. And I don't mean that to be in a derogatory sense. I like noise. Clearly, you guys can see we like noise intraday, and it speaks to us. So that's what I'm looking for going forward into tomorrow. If I don't get either one of those scenarios, then obviously I'll give you an update on the forum tomorrow night, or tomorrow evening around 3 o'clock when the bonds close. If we have anything with any new scenario other than what I just outlined here, I'll send it to you by way of a chart and then tweet you the link to take you to the forum, and that way you guys can see it that way. It won't be a video tomorrow, okay? And I think that's going to be... No, let's take a little quick look at gold. I did some movement in gold today. It reclaimed the order block, bearish order block here. We traded into it here. Same premise, okay? Think about what I showed you on the cable from the open to the low here. Open to the low. We've traded down. We went back and forth here, but the order block is the array. In other words, that's the specific price point. We trade up into it here. Notice that this wick goes deeper into this wick as well. So this becomes a balanced price range. This is the reason why we come right up to this level here and it stops dead in its tracks. It doesn't need to go back above this high here. Okay. Now I'll rephrase that and say it in another way because it's very important what I just said. How do I know it's not going to go above an old high, Michael? How do I know it's not going to be a turtle soup, Michael? You probably have those questions in your head right now, or you've had them in the past and you've been waiting for an answer. The answer is this. If you see a balanced price range like we have here, or a specific price range, this candle's open and low, that range between these two price points, we trade up into it here again. It reacts. It does not need to go back up to this level here, because if it goes above this high here, really it's going to reach for a rejection block and trade inside of the mean threshold of this gap, which is the wick. Okay, that's how you start moving to different PD arrays. But how do I know it's not going to go above a previous high? I look for balanced price ranges, because that'll stifle any rally, and or vice versa. If we're going lower, it'll stifle any decline, like it showed in the British pound today. What I just gave you unlocks all of the losing trades. Okay, well, let me rephrase that. What I just explained to you here gives you the winning recipe for what I understood from reading Street Smarts book from Linda Raschke and Larry Connors. They don't really go into how to avoid losing trades, taking their turtle soup pattern, which is a great pattern. It's really taught by a lot of other different traders because it's just a false breakout. Chris Laurie calls it a riptide reversal. There's false breakout in turtle soup, which is a clever little name for that pattern, because the Turtle Traders by Richard Dennis, he trained people to do trend trading, and they would be buying 20-day breakouts. In other words, the highest high in the last 20 days. If it went up there, they would buy it and use a stop, really wide, and let it go. And when it worked in long-term trends were in force, it just kept on going and going and going. It had a lot of losing trades, but when it won a lot. The problem is it lost a lot. So someone capitalized on it and said, well, if that's their entry strategy and they lose a lot, I'm going to go in there and do what the retail-minded people are thinking and flip it upside down and do the opposite. They want to be buying a breakout. I'm going to sell that breakout. And that was the premise to me, saying, hey, that's what I need to do. I need to get in there and turn everything upside down. That's why I promote that book to everyone. I think it's a great book. I don't get anything for it. I don't use it Amazon, link where people, when they buy it, I get a kickback. None of that stuff. I don't have any of that stuff. I forgot what they call them, affiliates or something like that. But just go to Amazon and buy it yourself. Look it up and buy it from their link. I'm not going to provide a link to you, because I'm not really that interested. And who cares? It's not my book anyway. It's theirs. So anyway, digress. The fact that this is a balanced price range and it supports the idea that bearish order block has already happened here, this becomes a reclaimed order block, with the underlying premise that this is a balanced price range between the open and low of that candle. Now, I know some of you are new. Maybe you're in month 1 or 2 or 3, and I'm probably talking way over your head right now, and it feels like I'm going 100 miles an hour. I promise you, we talk about these things in later lessons, so please don't email me. Don't feel like you just got railroaded with all kinds of information that doesn't make any sense to you. It will. Okay, I promise you, you're learning a lot of stuff, and you have to be very patient and allow that learning to occur in modular fashion. 99.9999% of the questions you're going to feel like you want to ask me in an email, they're always answered in later lessons, and you have to be prepared to hear that answer from me. It may feel like I'm putting you off or kicking the can down the road, as the first group used to call it, but they can look back now and see those answers were provided. You just have to wait for it. Okay, they're in the lessons. There's a lot of jawboning and explaining about different things, and there's a lot of things also that the first group is still now learning, because I'm going into deeper depths of what it is that makes these things work. Okay. All right, so let's get into this, what I did. On gold, I was using the balanced price range, bearish order block, reclaimed order block. Yes, it's a whole mouthful there. But basically, we were running a buy stop liquidity pool here. It shot up into that balanced price range. I went short at 1510 with the expectation that we would run 1490. That was my objective, which would be right below here and the gap closure. All of this movement below here, I did not participate in. I collapsed as the gap closed in here on the order block. That was all I took out of the trade. I did not participate in this wild run below this old low here. So in fairness, I did not have this blue line on my chart. That was added afterwards. Okay, so this big nice decline only was really capped at the order block for me, which is, it's sufficient. It's nice. It's perfect for me. I don't care. I'm not trying to get everything. Okay, and you shouldn't either, because you're not going to. Just be fair about everything. And I think that's going to be it for tonight. I am exhausted. I've been up for 31 hours. Yeah, 31 hours I've been at it. So pretty tired. So I'm going to try to get some rest ahead of midnight. And then I will talk with you all by way of Twitter tomorrow around 6 a.m. And we'll walk through the UK rate announcement and London Open. I'm sorry, New York Open. Until then, wish good luck and good trading. All right, I'm showing you a British pound trade I did this morning, and you can see I'm waiting to go long after the candle goes down. I'm looking for a down bearish candle to trade long into, and I'm targeting the equal highs and the liquidity above that. Okay, long entry has been made. Stop has now been placed. Now we created a fair value gap here already, and if I would have missed the opportunity to go long, I could go in long right now. That's a fair value gap entry, and we should see up movement from there, which is positive. Now I don't see that as a breaker. You're probably thinking that's going to be a bearish breaker. I don't see that because institutional order flow is drawing price to the equal highs, the relative equal highs. Market's consolidating. Now there's another small fair value gap if price were to trade down a little bit more and offer another opportunity to get long. Had I not been long and there was more pips available than what really is shown here, I would have elected to use it as well. It hasn't traded down into the fair value gap yet, and then right now it's expanded but left itself inside of the range between the equal highs and the low I just bought from. Now we have a bullish order block. Okay, so we're going to watch price when it trades down into the top of that bearish candle on its wick. Boom, right trying to time this. I know it occurs, but I'm speeding the video up. It's hard to see it when it happens. I'm adjusting the stop now. It's above my entry. There's the order block right there. That's the order fill if you went going long there, and it's also a fair value gap entry. Now an expansion on the upside above the equal highs is what's expected. So what we're seeing here is we're seeing signatures with institutional order flow finding support on down close candles. Fair value gaps are also being respected and sending price higher. And we're seeking liquidity above the obvious level of equal highs. So now in this area here, it's usually very worrisome for traders because they don't know if it's going to reverse on them. They don't know if it's going to stall. And the idea is you want to anticipate a run above those equal highs, not just simply a pop above it. You want to see a really deep retracement above that. And there's another return into the down close candle. It's a bullish order block entry. And your stop would be just about where my stop loss is now if you were going to use that as your entry. Then we have the market moving sideways inside of the range between the equal highs and the low I purchased. Another down close candle. Wait to see if it trades back into it. And there's your bullish order block again. I'll zoom down a little bit so you can get a better feel for what's happening. And again, since we traded into that order block, we want to see that type of action right there. That's a confirmation that you are in the right direction and you're on side, not off side. Off side is when you're on the wrong side of the marketplace and the market maker's business plan will run right over top of you. What I was purchasing was the consolidation to the left of my entry, about midpoint of that. I was using equilibrium there. And we're above the equal highs now. And again, you can see my time. I can't believe these guys on YouTube actually believe this is a strategy. What is it? A strategy? Strategy checker? No, strategy tester. And it's this live trading. It's me doing it as it's happening. All right, so we have a limit order just above us. And I want to adjust the stop when we're this extended above equal highs. And there you go. You can see me doing that. And I'm at the point at which where the order block was traded to. That's where my stop is, so it shouldn't come back down there. And then I start getting silly because I knew this is going to go on Twitter. And I'm trying to get 95 as a best case scenario. And look what it does. It gets right to it and flirts with it. Doesn't give it to me. And just for theater on Twitter, I'm putting annotations in here. I really wish I wouldn't have done these because I had every intention of putting them in the mentorship and going over it. But it's just me being silly. All right, so we have a down close candle and a little bit of a liquidity void. Ideally, it's better if it hadn't gone down to touch that, in my opinion. And I would have, otherwise, if it was a longer term trade, I probably would have taken something off as it slammed into that, thinking it would have a deeper retracement. There I am being a little bit more silly. Now again, my stop is under the equal highs. So my thought process is there's a fair value gap that's trading into right, well, there. And I want to see it rally from that point. Then it starts to chop wood going sideways in here. And eventually I feel a little bit more confident that it's going to trade back to the old high. But I do take a large portion of the long off. And now the stop is adjusted. Admittedly, it's a very, very tight stop, but it is what it is. And I'm sorry you probably hear Bella. This is narration, so I can't really do any kind of editing like I normally would, so I apologize for her in the background. And here I am suggesting that I probably have not executed as well as I should have, meaning that that limit order was just outside of where the market was willing to go. And here we are trading at that down close candle and a bullish order block. So I want to see price expand from there. Now I see the liquidity void where that long down black candle. I'm concerned that it goes up to that point and closes it in and then falls over and goes down. So as we start to trade up into that, that's the reason why I elect to take a large portion of the trade off. And we're trading back down into that down close candle, bullish order block. Got real close to my stop there. Now I'm thinking to myself, it needs to run higher here. It cannot go any lower, obviously, because it's going to take my stop. I like the relative equal highs that's being cleared right now, and I want to see expansion higher. All right, so it's starting to expand on the upside, and I'm thinking I might get a little bit more of a run now. Good night kisses, just basically being silly again, giving me what I want before I end the day on this session. So I took 40 lots off of the long, and now the stop will be trailed. Now what I'm doing is what I want to do is chase the equity. Okay, that means as the market's moving in my favor, I do not want to withstand any kind of a retracement of any kind, because now we're above the old high. So it could easily retrace and knock me out. And I don't want to leave myself open to that downside risk for open profit. Now, it wouldn't have been a loss if it would have came down and hit me without me moving the stop up, but I would have given back a larger portion of the open profit, and I didn't want to do that. So this is chasing equity when you move your stop loss up tight like that. And there I am getting knocked out with a final balance, and I'm okay. Now here's another trade I did. This is towards the end of the afternoon when this is FOMC related, and I'm trading the breaker, bearish breaker, after 3 equal highs were purged and we broke down. I'm trading right back into that bearish breaker, and I'm targeting the liquidity pool identified there with the little hello, and that's my initial target, but I want to watch how it trades, because if it's really, really fast, then I will want to move that limit down below the lower set of equal lows. But initially, I want to see that short-term low that I have annotated with that blue rectangle. That's the liquidity pool I'm aiming for. So what I'm wanting is a 5-minute GBP. I want to see the market really show a willingness by speed and how much distance it covers going lower. Okay, stop is now above, or in this case below my entry point. So I don't have any necessarily really any kind of real risk. Not to say it can't gap above it, because it can do that, but theoretically the stop should do its job. Let's say it that way. All right, so the market is now approaching that short-term low it just bounced off of, and I want to see it reach deeper for that and then expand and have large down candles. I don't want to see it dropping with small candles, because as it drops with small candles, it's more likely that it's going to create a reversal. I want to see large candles reaching down to old lows. That's going to be indicative of a willingness to go below the low. That's what we're starting to see here. That's very good. And we just swept the low right there. Okay, so now I'm confident that we're probably going to reach for that next liquidity pool right below in that blue shaded area. My limit order is there. Now the problem is it spent way too much time, in my opinion. That's the reason why I didn't move my limit order down there. And you also notice there's a buy limit order. So what's going to happen is it's going to fill me for the short that I sold short on the breaker, and I have a waiting pending order to go long as it trades down there and takes me out. It'll also fill me long, so I'm using it as a reversal. My thought process is, because it didn't take a lot of speed in the move going lower, it actually took more time than I wanted it to. I'm using the order block that my buy limit order is sitting right on top of. That's what I'm trading off of. So as price drops down, you'll see my sell order collapse because the limit order is filled, and then the buy limit order gets activated. Now, in all the things I was doing today, I had a rookie error here. You'll see that there actually is no stop on that buy limit. So this could have got bad. Admittedly, really bad. If it would have plunged down below those equal lows, I would have been hurting, and I would have had to repair that. But I'm doing a lot of things. You can see the sell position or short position I had has met its target. The limit order was filled. Now I'm long. Okay, so I'm going through emails, I'm checking back, I'm going on Twitter, I'm checking my accounts, and I'm going to go back to this screen here and realize that my limit order on the short was filled, but also I'm now net long with no stop and no target. So I got confused with all the things I was doing today, and I saw my entry on the short position. I looked at that, and subconsciously I thought that was going to be my exit or my target price, which you'll see me actually do. I'll adjust and put a stop loss in here, and then you'll see me put 24.85, which will eventually be regretted because I wanted to do 24.95 to 24.10, which ultimately would have given me a better fill. So here I am putting the target in. Right now, initially, I'm aiming for that middle, that fair value gap. Now I'm going to move it up to here because I feel confident. We had a nice movement. Now my stop is just underneath the entry. Now I want to see it rally into that bearish order block inside that swing we're into here. I want to see it trade up into that, and then I'll be more aggressive about taking my stop and moving it above my entry point. That's what I'm wanting to see that occur. All right, so we're inside that bearish order block. Now I want to see that candle give way. I don't want to see it offer any kind of real resistance. I want to see it just give up the ghost, if you will. Now I'm annotating this level here, willing to allow it to trade down to that because it's a balanced price range. The down close candle I'm highlighting, okay, if you look to the left of it, that's a fair value gap. That is not going to provide a sell scenario. It's a balanced price range. If you go through the left side of that fair value gap, you'll see that like down close candle and up close candle, like a railroad track type swing low right before the breaker was formed where I sold short. I'm expecting price to come down to that level where it's shaded red. I'm willing to sit through that, but it should not go below that because it's a balanced price range. Now, I'm suggesting in the annotation here that it can pause, which trade in small ranges, in a small dealing range. But I'm anticipating that red line I just annotated, that's going to provide support on the basis that it's a balanced price range. Price has moved down and then up through that range, and it should not move lower. The liquidity that's above where I have the annotation hello and a little smiley face, if you look to the left, you'll see the old high back there too. So I'm trading on the idea that that's relative equal highs and buy sell liquidity that's going to be purged. All right, so technically that's a fair value gap entry there as well. So this could be a long entry. Had I not been long, I could be in there as well or adding. And I want to see price not showing willingness to go lower here at all. I want to see big, beefy green candles. I don't want to see any kind of lethargic price action, and this is what I get. I get a nice confirmation that I'm on side, not off side, and we should see it run up in there and hit that limit order in pretty stunning fashion. Now I feel confident. I don't have to worry about moving my stop loss and try to protect anything because I want to see it move up into that buy side liquidity pool. Now we're trading at the breaker, so this would be a buy signal as well. In other words, this would be a bullish breaker that it's trading into right now. Where my original short position was as a bearish breaker, now it's become a bullish breaker. And we want to see price, again, expand on the upside. Downside should be limited to the breaker that it found support at in this candle's formation. Now we should see expansion on the upside, reaching up into that buy side liquidity pool that's resting above those equal highs. And we should start to see it here. Small little wick. Traders will see that want to go short. They'll be selling short here, trusting that that is resistance, and their stock could be placed above where I have that little hello and my limit order to exit my long, and now they're going to ram it up there and take them right out of the game. Right now, the algo is targeting that old high, and IPTA will reprice aggressively to the upside and clear the liquidity above the intraday high. Now it's crouching below the buy side liquidity pool, and what that means is it's pausing right below an obvious run on liquidity. And it should punch up and take that liquidity out now. And there it is. So that is a reversal.